Okay, traders, good morning and welcome to this live intraday strategy webinar. Today is Thursday, November 23rd. Mike Boutros here this morning. Great to be with you guys. Eileen, Henry, Conwall, Mark. Good to be with you guys this morning. So we just got the release of durable goods orders from the United States, really smoking it. 4.8% versus expectations of a print of just 1.7. Nice upward revision to the previous reads, guys, from a negative 0.3 print to a positive 0.4. Initial jobs claims, slight uptick higher than expected, but not enough to really cause any major stir here. Looks like a positive print across the board. Capital goods orders non-defense, ex-air, which is typically the best gauge that the Fed likes to use for business investment, also really coming out strong here at 0.4% versus 0.3. So beat across the board. Quick look at where the dollar crosses are. We'll take a look at those today. We'll also want to review the setups from last night. Guys, we are heading into that holiday weekend here in the United States. So as you get through the FOMC minutes later today, about 2 o'clock Eastern, you're going to start to see some of that market participation, okay, start to dwindle down. And that can offer some big swings in price, but we want to stay prepped. We want to just make sure that we're being a little bit more selective. We're staying very nimble on any intraday positioning we take from here on out for the remainder of the week. Okay. All right, so as usual, guys, as always, questions, trade setups you want to review, please feel free to post them on the message board at any time. We'll hit euro, pound, Kiwi dollar, dollar, yen from yesterday. We'll take a quick look at all the dollar crosses heading into the close of the week. Obviously, this is the major print for today, guys. You get the FOMC minutes at 2 o'clock. I really don't think there'll be anything new. If we take a quick look right now and take a segue here, take a quick look at what the overnight index swaps are. Fed Fund Futures also pricing in 100% likelihood that we'll see the Fed move on interest rates next month. Really, it's the expectations subsequent that is the major focus moving forward. So, I'm not really expecting anything new from the minutes today, but do keep that in mind. It's released at 2 p.m. Also, quick note, we do have the midweek strategy webinar with Jamie on tap later today as well. Okay, and that's at 12 p.m. Eastern, so don't forget that. All right, let's jump right into price action. So first things first, from yesterday's update. Sorry about that. Here we go. So, take a quick look at Kiwi dollar. This is dollar CAD. We've been tracking this very closely. Also, me and Jamie were just talking about this right now. Look at this rebound yesterday, guys. So let me take a quick segue. I'm going to go out of order today. Excuse me, a little getting used to the new system here, so just bear with me. We'll go over the previous session real quick. Update on dollar CAD. Now making a break through near-term resistance at 34.70. 34.93 just higher is the 618 of the move. Here's what dollar CAD looked like earlier in the week. Okay, here's where we were, and those slope lines continue to be the same exact slope that's in play right now. Okay, you're basically looking at basic trendline resistance off the highs that we made for the month, tagged again last week. That same slope, if you take some parallels off it, have offered some very nice turns in price. Specifically, the lows of this week coincided very nicely with that slope. And here we are at near-term resistance to 50% retracement, trying to make that push through. So subsequent levels from here, you have a swing low that's 618 that comes in right around 34.93. Largely speaking, here's what dollar CAD is on the daily chart. You can see we turned right ahead of that longer-term median line. So look, it came within striking distance, just pips of a 100% extension, 2 equal legs down. Could be a near-term low. Basically, you're looking to see if we cross that 34.93 level to the upside, say 35, to see if we can get a run on that upper parallel. Went long last night, up 40 pips. Henry, nice. Well done, sir. Well done. Yeah, so again, I like it higher as long as we hold that low that we made, but basically look for near-term targets at 34.93. If you get through that, this probably has some more legs to it. And in fact, a quick extension off that low. Bear with me one sec, guys. Just take a quick look at this. Yeah, well, 35.13 comes out to be the 100% extension. The upper parallel comes in right around 39.40, yeah. So top side targets are pretty clean on this one. Okay, Henry, so on a scalp basis, we would look to be peeling off a little bit at each of these targets, bring your stops up as you move up, and see if we can get a tag of that upper parallel. But well done. Looks good. Hey, you're more than welcome, man. My pleasure. Well done on that. Eileen says, wow, the 10-year bonds. Yes, so those are been on the move, right? Actually, it's right here, TY1. TY1. Yeah, there it is. So you're seeing a little bit of a breakdown here. 10 years, the daily continuing to move lower. So you're basically approaching the lows that you made for November of last year at this point. But not surprising, right? Yields are going to continue to really move as interest rate expectations continue to climb. I mean, the time is at hand, guys. We've been waiting for this, and the Fed has been wanting this for a very, very long time. Now, if you're in the market to buy a house or you're buying a mortgage, it's not probably the best thing you'll see, but certainly it is what the Fed has been looking for, a welcome change. All right, so any questions before I move off on dollar yen? Or excuse me, dollar CAD from the levels that we just covered. Again, this was from Thursday's update. Levels remain pretty much unchanged as far as the structural setup is concerned. The only thing you want to tag onto there is this retracement from the decline off of Friday's high, and also the extension that we just had from the ascent off of this week's low. Questions on the loonie? Okay. Take a quick segue back to yesterday's piece. Starting off with the Kiwi dollar. So here's what Kiwi looks like. A very similar setup actually to what you were just looking at there with that decline off the highs. Although here on the daily chart for Kiwi, it looks a lot more interesting to me. Here's what it looks like on the daily. All right. Okay. So just a couple of things to highlight here. Okay. Where we reversed off of. This is a simple parallel right here from the high. So like the short-term setup that we're looking at with dollar CAD, same thing here on the daily. Nice bisector here, caught the highs that we made late last month. And again, the lower parallel, literally almost to the pip there on the low that we made back on the 21st of this week. Near-term resistance, I still have, and bearish invalidation near 71.09 from a scalp standpoint. Now, you would need to crack the monthly open, I think, to get this thing going any higher. But these are some near-term levels of resistance that we're still looking for as far as Kiwi. Key support hasn't changed since last week, the level that we highlighted at 69.51 into 69.70. You're looking at the swing low from June, the close lows and swing lows from July, the 100% extension from the decline off of the highs that we made for the year. All of those line up in this zone alongside that parallel from the lows of last month. Okay, so this is still the key level to keep in mind here for Kiwi. Here's what it looks like on the intraday. You got a nice rebound off of that lower parallel to start off the week. Again, it was looking for a rally to fade, near-term resistance, and the bullish, or the bearish, excuse me, or invalidation level. There is the monthly open, which comes right alongside the 38.2 retracement of the decline. Intraday looked like this. Nice weekly opening range right above the median line parallel. Here's what we look like right now. All right. So you're still in the weekly opening range. Near-term support that we highlighted yesterday at 70.35. Looks like we just broke that. Now look for near-term support right back at the weekly open. And that's the last-ditch effort before this key critical zone, 69.55, 69.70. You also have the Brexit low, guys, which comes into that region. Again, the lower parallel, it's loaded. So on a break of this region, I would look on for just broader continuation, guys. Would look on for just broader continuation to the downside. Okay, and that would take you to 69.16. More so, a bigger level to the downsides all the way at this 2016 open. That's like 68.30. So broadly looking for an exhaustion rally to sell still. I was hoping to see one last stab here before it moves off. But guys, at the end of the day, this is a very clean weekly opening range. Here's your weekly open. That's the weekly low. Here's your weekly high, which we tried for 3 days. This is Wednesday here, unable to do anything. So look for a break of that near-term range to really validate our immediate bias. Still favoring downside below 71.44, 71.50. Make sense? Would you please anticipate the gold? Nether, yes, we will definitely go over gold, my friend. I know Conwell's in the room here today as well. So I know he won't let me leave without going through all the com block. We'll definitely hit all those for you. No worries. Okay, so that was dollar CAD. This is New Zealand US dollar. If there are no other questions on this, hey, you're more than welcome, Nader. So instead of setting off Siri, Jamie's little one gets on the voice, right? It's the theme of his holidays. Yeah, he is adorable, though, let me tell you. Can't complain. All right. So back to business. Let's go over the next subsequent update from last night, which was a very interesting level here on dollar yen. I've been highlighting this, guys, to you in the webinars and on the intraday charts for some time. We're basically looking for some sort of near-term exhaustion high to get a pullback. There's some interesting levels immediately that are sort of like coming right up that I would be wanting to look at. 111. 45 was the first one. We pushed through that. The next one's 111.28. And the significance of this level is this is basically, if you take it back to the daily chart here, it's the 50% retracement of the broader zone from the decline off the highs here. Okay, so if we take the entire decline from June, the 50 comes in right here. Very nice pivot in price as well. You have the upper parallels, guys, which is on the daily chart really the key for dollar yen. This is basically the only thing you've been needing to follow for the last like 2 weeks, is this daily chart. All right, so here's the high, swing high from, what was this, back in May? 111.45. Okay, a sliding parallel of the same slope we've been following, extended off the low from July, converges just ahead of that 112.32. So I'm basically looking for exhaustion right around these levels, maybe a little higher. You know, before this thing finds a near-term pullback. At the end of the day, guys, it's a breakout, plain and simple. So longer-term story, I still think remains constructive. You're in well in overbought territory, so it's not something you want to necessarily fight. But from a scalping standpoint, again, or an intraday positioning, here's what it looks like. So you can see in a revisionist scenario, we kind of probe into this level. We'll want to see what the close looks like today. If it fails back below 111.45, I would be looking to pull a playback near 110.26. 109.75 would be an area of interest, but bullish invalidation I still have down here at 108.57. Okay, that's basically the median line off the lows, the 236 basic retracement, a nice pivot and swing low from last week, all coincide right here. All right, if you're holding long exposure already on dollar yen, I would be looking again to start really, wrapping that position up, taking more positions off at 112.28. If it's an intraday or shorter term position, those are the levels you want to be looking at near term to the upside before, or where you might be wanting to look to book some profit, bring your stops up in the immediate front. But 112.28 is the next immediate topside level I'm looking at for dollar yen. Eileen says, going long dollar even on pullbacks. Any clues for when to think about jumping in anyway, or just exhaustion?
Talked about this during the webinars. I think that this.
I don't know if you guys are hearing this, but Jamie's giving us some drops here.
The next pullback on them where the next pullback's going to end up being like a collapse.
Collapse. That's exactly what I was about to say. So, guys, what we're thinking and the kind of theme that we've been going back and forth with
the former high though
is
100.51 in DXY.
Oh, you're looking at DXY. We'll look at that chart in a moment.
As a general theme, like whatever.
So basically, as far as the DXY is concerned, Eileen, the former high, let me show you this real quick, is where the initial support would be. But basically, the thing that we were talking about is, yeah, long dollar has been the play for some time, right? Look at this freaking chart. But at the end of the day, what you want to consider is this. It's been quite a rip. We've gone on now. We've only had 1 day of down, essentially, for the last 3 weeks. And an exhaustion pullback, Eileen, on a trade like this is likely to be a mean washout. So that's what me and Jamie were talking about. Like if you want to try to buy a near-term pullback in dollar on the dollar rally in general the last couple of weeks, yes, that's worked. But at this extent, to the extent that where we're at fresh all-time highs, all the momentum indicators essentially pretty much in overbought at this point, you just want to use some caution, right? Because the pullback, it might start to materialize like a near-term pullback. You want to start to fade to get more strength, but those can quickly turn into just a washout. In which case you still would get a nice entry point, but it's going to be much lower from, where we are now. So as far as the DXY is concerned, if we just take a quick look, where's the reference point for the first basic support level? Well, it'd be basically the yearly highs that we made essentially until this break, or the January opening range high for the year. That would be sort of a support level I'd be looking at. The subsequent, or the initial support, is the high that we made last year. The levels haven't changed from the charts that are on the intraday page, guys. So 100.51, the high from December. Okay. The HDC, or the high day close, comes in at 100. And then, like I said, the highs for the year in January here are levels I'd be looking at for bullish invalidation for the sort of immediate rally we're seeing. Does that make sense, Eileen? Or just reduce risk and try it, dollar pairs, depending where the structure ends up. So what I want to say is this. I'm giving you sort of a general theme on what the dollar index on whole is doing. We want to take every trade on its own merits. So I do think there are some dollar crosses where if you get some sort of near-term pullback, yeah, you want to still continue to play it. And one of those examples is the pair we just went over, right, at the very beginning. Dollar yen, if we get a pull into 108.50, I think that would be a great level to sort of look to find some basing, look to find some exhaustion on the short side, re-entries on the long side, the median line, nice level there. But just use caution. Thin liquidity environments heading into a holiday trade with exhaustion on a lot of these advances can sort of be the recipe that you need to get those washouts. Okay, yes, makes sense, and use caution, as always here in these environments, especially. I'm with you, Eileen. Michael said, Conwell says, Michael, sir, please discuss commodities at the end as I'm leaving for a few minutes. Where do you think are good levels of support in silver? I got you, sir. No worries, Conwell. We'll go over the con block before we wrap things up. All right, so that is US dollar, Japanese yen. Number 3. Next, from yesterday's update, is I did want to give you guys, again, a quick update on what we've been tracking in euro pound. That level, or that trade, came into the initial level of support that we've been looking at since the breakdown, sub 87.30. Basically, that level is comprised right here, a nice Fibonacci confluence region with the median line, longer dated median line that gave you like 84.78 to 84.90. Here's what euro pound looks like right now. So 84.91 completes a 1618 extension from the decline off the highs for the year. 84.79, 84.80 completes a basic 764 retracement from the advance off the swing low we made in July. Basic trendline support from that July low comes in just lower, and if you take a longer term approach, that median line for the broader formation we were in until basically the breakout in June, that median line, which has caught some very nice pivots in price, converges just lower. So the immediate downside bias looks like it could be a little tired here. You stay basically, let me take a step back. You could see a rebound from here, but the near-term bearish invalidation, or key resistance, let's call it, isn't up till 87.10 87.10, 87.39, this region. So longer story, as long as you stay below that, you're at risk here in euro pound. Immediately, the short bias is at risk while above that 84.80 level. Okay, here's what it looks like on the intraday. Here's what we looked like earlier in the week. All right, so the level is still pretty clean, or here's what we looked like last night. Level's still pretty clean here on this median line formation off the highs. Again, there's that key support we turned from just ahead of. I don't have on here, guys, the 618. I was trying to keep the chart clean, but let me just show you how it looks. It was perfect tag right there. And this is still basically your key support zone moving forward. Okay, 84.78, 84.91. You're basically checking the weekly open today on this rally and the move back. The immediate resistance level and area I'd start to looking for as far as initial resistance is here. Same parallel. And if you take a step back here, bring this to a 4-hour real quick. Check this out. Median line, 1618, 764, and not a major parallel, guys. I wouldn't necessarily stress this, but former resistance, break, support, support, also in that same region. So look for a near-term rally at this point. I would be looking to fade that rally below structural resistance. Immediate bearish invalidation level, you still got to look at 87.36. At downside break, you're looking for 84.15, 83.48 would be a really nice level, and I would really use caution on short exposure, guys, if you do get down there. A basic 38.2 of the entire advance. The swing lows from back here in September. The 50 line, or this 25% line rather, the bisector of the median line formation, all coincide down there near 83.48. Any questions on euro pound? The grandpa trade, as we call it, has been it's been pretty clean. I can't say I've been very excited about it, but the levels have been exceptionally clean. And as we always say, where there's clarity, that's where our focus will be. Questions on euro pound? All right, we're making good time here today. So that was yesterday's update. Let's take a quick segue and cover the rest of the dollar crosses. I know we covered dollar CAD, Kiwi, and dollar yen. Let's go over euro and pound real quick, and obviously Aussie dollar. All trades which we've been following throughout the course of the week. Let's hit yesterday's update again. Okay, I will come back to Euro Aussie in just a moment. I do like this trade a lot, as I highlighted it yesterday. But let me move down just for a moment and cover the Aussie dollar. So here was the basic setup that we looked back on the 21st, guys. And it was a very near-term setup. We were just testing, initial resistance at 73.86. It's been sort of a messy play. The break didn't really get you the run that we were looking for, kind of fizzled out. Here's what Aussie looks like just now. All right, it took a while. This is what yesterday looked kind of ugly to me. It was kind of keeping me away from the Aussie on the intraday. We broke this near-term descending channel formation. Typically, as I always tell you guys, when you get these breaks, you want to see a zoom and retest to confirm the break, or at least a run, right? Don't like to see this dilly-dally kind of just slowly, seduce its way through resistance, right? But inevitably, if you waited long enough, you actually did get the pullback, test as support, and we moved through. So at this point, former resistance, where we were talking about yesterday, is now being tested as support at 73.86. I actually did try to press a short against this trade. I got stopped out on this breakthrough 74.16. Here we are again, 73.86. Real quick, just as a real near-term approach, I would take a quick retracement here. Let's clean that 618 up. Don't need to stress that anymore. And some levels just to keep in mind here. Nice pivot in price for the week, 50% retracement of the weekly range. Former slope support, 73.77. Again, I've been, kind of dragging my feet here on this Aussie trade. The daily chart really is what has me going here. You see this, guys? So as we started the week, we were talking about look for resistance here. If this holds, it would be sort of a sweet spot to get that final move towards our final target that we talked about weeks ago down here at 72.80, right? Yearly open, 786 retracement, lower parallel, swing lows from back in June of last year, of this year rather. It's loaded. And on this rally, you can see that we fizzled out right ahead of that 50% retracement. So again, heading into the holiday weekend, thin liquidity conditions, I wouldn't put it past this thing to see one more stab at that 74.60, but broadly looking to see some resistance here. Need to get to that 72.86. That's the major support I'm still looking for as far as a breakdown here in Aussie. Questions. I do want to remind you that we do still have data on tap heading into the close of the week. We're not out of the woods just yet. On Friday, well, let me take a step back. Later today, you still do get new home sales in the United States as well as the University of Michigan. This is the final read. No revisions are expected, so don't expect too much here. But heading to the close of the week, you still do get on Friday wholesale inventories, market services PMI numbers. Early next week, we get those annualized GDP numbers. We're expecting to see another upward revision to there's that third quarter print from 2.9 to 3.1. So there's still a lot of stuff on tap for the dollar crosses as we end this week, head into the start of next week. Long story short, you still want to stay nimble on any new intraday positioning heading into the weekend. Eileen says, hi, or Aussie dollar, where might you look for new shorts and timing as far as next week? Like the set levels I just mentioned, Eileen, I still think are kind of where I'm hung up. If you're not, let me take a step back. So the vertical targets that we've been highlighting, or the horizontal targets we've been highlighting haven't really been all that rigid, right? I want to look for a rally into structural resistance or structural support, ideally, to try to get back in on this. It really depends how you're looking to play it, Eileen. Honestly, if this thing rallies or rips on a spike into the U.S. Open at 74.60, that still would be a level that you could get a kickback off of. But ideally 75, this region that I highlighted earlier in the week, basically this. Okay, this median line, which has offered so many pivots already. Resistance, resistance, support, 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 break, resistance. And you got those swing lows from last month, just higher. So all of those will line up around 75, which is kind of what I was looking at early in the week if we did get the breakout. I wouldn't go chasing this here. Not yet. If you're looking to play this, it says, okay, I see it, and maybe reliable signs, signals then next week. I mean, here, again, the near-term immediate bullish invalidation level, right? That hasn't changed. Objective weekly opening range low. You with me? Right on. Okay, so that's the Aussie. You don't have any Aussie data for the remainder of the week, so look for the dollar, really, as far as event risk is concerned moving forward. All right. Okay, moving right along. Let's go back to the update from our previous release. Some of the interesting crosses here. So we've covered most of the majors. I do want to touch base on Euro and Euro Aus, so I'm going to take another segue back. Here's what the euro dollar looked like earlier in the week on the update from Sunday. We covered all the dollar crosses, and this one's still, again, it's been a little bit of a slow burner. Here's what euro looks like now. Kind of making a run back at that structural support. This is the hourly chart. Going to take it to a 4. There we go. So immediate bearish invalidation. The January low. At the January low, 107.10, never even got hit. Initial resistance at 106.61, never even got hit. I think the high was like 56. So it's been a tight range, right? But inherently, this right now constitutes a break of the initial weekly opening range low. We're sitting at structural support, though. Okay, the slope line, we're still basically just there. So I don't want to chase this here either. Let me show back to the daily chart, kind of give you a visual of where we are in the broader picture. You see this? This is why we were looking for the rebound, that major basic confluence support of a 2015 trendline support and the lower parallel extending off of the yearly highs. Okay, looks like we're making another stab at that right here. The low for December of last year comes in at 105.16. That's the next sort of last failsafe. Below that, I really don't have anything to 104.60. You have anything longer term on a euro breakdown? Sub 104.60?
Oh, the things that I'm looking at are really those long.
You have some weeklies that you can show them today?
Parallels. Yeah, I mean, I'll show them some stuff.
All right. So, guys, again, Jamie will be on later this afternoon with longer-term weekly charts.
There's a breakaway gap level at 103.70. It's like if you measure the decline from post-election and then from where the gap was and kind of get 2 equal legs between the gap being the midpoint, it would be about 103.70.
Okay.
But really, it's the long term. It's just those long term
Slopes.
Downward parallels. You know.
Yeah.
By the way, we're 13 pips away from 112.30 in dollar yen.
Nice. 112.30. There it is. Keep an eye on this, guys. We just talked about this early in the session. Okay. As far as possible resistance here, heading for the dollar yen. But to answer or to go back to the euro. As far as the downside targets are concerned, keep this in mind right here. I still want to see what the close looks like. Remember, the structure has seen some invalidations of intraday price action, but it's going to be all about the close of how we look today. Long story short, I am inclined to continue to look lower just on the basis of a objective weekly opening range break to the downside. We are checking structural support, so today's close will be important. Immediate targets at 105.16, backed by 104.60. Questions on euro? The dollar ripperoo continues. And remember, it was interesting. We talked about this early in the week about some sort of dollar exhaustion, right? Yeah, one day. That's all we got. All right, Aussie dollar. Any questions? Going once, going twice. Sold, or excuse me, euro dollar. Number 5, euro is number 6, number 7. Let's go over British pound. So the sterling's looking like this. Look, the intraday position for the sterling, or the intraday levels, have actually continued to pan out rather well. Here's what our setup looks like from Sunday. Remember on Sunday, the only thing that we wanted to highlight, or that we were sort of stressing, as it were, was just the basic support level of which this thing had turned from, or was looking to turn from. And that was confluence support basically into 123. You had the 618 retracement, which we rebounded off of on Friday. Just below that, you had a nice confluence of basic trendline support off the yearly low, a key 618 retracement, and even a slope line from the descending formation that we were working with, all coincided right there. So the immediate downside bias was at risk heading into 123. We were looking to play rebounds into targets at 123.80. You had 124.33, which was another target, and then 124.60 was the final target, which was basically this median line confluence. right? Here's how it panned out. We actually ran right through that earlier in the week. So there's that 123.60 region we were looking for. We even capped through that and tagged that swing high that we made last week at 125.12. I have that as a soft target now just because it not only is that swing high from last week, but now it also represents objectively the weekly opening range or the weekly high. So keep that level in mind. Here's the pullback again. Guys, 123 is still the level to look for. There's nothing changed here as far as, your major support, your basic trendline support off the lows, 618 retracement. You got the works here. I do think sterling does possibly break down, but we know the levels we would need to clear to get that bias, and that's still right here at 123. You got your monthly open as a target to the downside and 786 just below at 122. On a top side break, the levels are pretty clear too. You're looking for that high day close into 125.96. All right, here's the level, guys, that we were looking to play on a breakout. So again, to start the week, okay, so to start the week, the game plan was to look for a dip into this region, to play a break into this, to look for shorts. On a topside clear above this region, this is the level that we would look to find more immediate near-term confluence resistance. And that's this right here. It also is a 764 retracement now. So I don't know if we get up into that region. We're right slap in the middle of the weekly opening range. So from an intraday standpoint, I don't have anything to do right here. If we move back on a washout trade towards 23, I'd be looking for exhaustion. I'd be looking for possible long entries. But if we break below that, guys, at this point, you just want to bail on the long side of sterling. Eventually, I do want to be short from these levels. Again, I still think you're at risk at possibly trying to make a move towards that key resistance structure or key structural confluence, let's call it, just sub 26. Any questions on cable? As far as sterling is concerned, it's very important to note that you do get the preliminary, which I think is the second revision for UK GDP numbers into the close of the week. So again, even there, or event risk from that side isn't quite over just yet. We're not expecting any changes, but certainly that was a pretty decent print that we got at 2.3% last quarter. So we definitely want to keep an eye on that. Private consumption figures and government spending figures are also released at the same time. Slight uptick on government spending, slight downtick on private consumption. Expected. I haven't, but let's do that, Amir. Amir says, hi, Mike, and everyone in the room. Pound yen, please. If you hadn't already covered it, I'll watch it in the archive. No, I haven't covered it. We're just covering pound, so it's a good time, Amir. Let's take a look. Pound yen. I actually haven't revisited this since last week. You guys know we were aggressively playing this one last week. Got some really nice plays. I definitely, bailed too early on the trade, but again, the market condition is such where I kind of just don't want to be in these for too long, although we're getting the run now, and if you're holding a decent core position, guys, it is a good environment to kind of hold on to it. It's trying to find new entries on these that's kind of been tricky a little bit for these extended breakout positions, but look at this. So you're basically looking at the next near-term initial topside target at 139.28. You know what? I would probably just want to see what this looks like on a 6.4 and see if we've pulled back into it yet. We're basically testing that right now. Yeah, I'll work with that for now. And this swing high is a nice pivot. Bear with me just one moment, Amir. I'm just going off the fly here. I haven't looked at this week yet, so let me just see what I got. Wow. These slope lines are just the gift that keeps giving, huh? Watch that near term. In fact, if we bring this back to the 786, there's probably a confluence right there. So I'm going to take that back. Near-term resistance, or a region I'd be looking for. Null and void. This retracement, now that we've maxed that high, is kind of not really necessary at this time. And even marking some pretty strong divergence on this 4-hour chart into these highs. Okay, so price action has continued to push it. This is, and again, a perfect example. If you guys remember earlier in the week, or last week, I'm sorry, this is the first webinar of the week, early in the month, we had that webinar where we went into really in-depth on divergence and talking about how to really use the RSI and momentum signatures in generally in a more beneficial way. And this is a perfect example of what I was trying to note as far as timing. Do you see, guys, this RSI signature right here and this Momo signature has basically been marking divergence for the last 2.5 weeks. So that's an issue that you always want to be mindful of. Now, it just so happens we're coming, in my humble opinion, into a little bit more of a critical structural resistance at this point. But point being is that these divergent signals can really continue to materialize for quite some time, and it really doesn't give you an indication on timing, more so just that the topside sort of push is getting a little tired, is waning. So I would be cautious here. I would be cautious with what we're seeing on the momentum signature. This is a 4-hour chart. If we bring it into a 2-hour chart, see if we get the same picture. Not quite as strong, but nonetheless, lower highs. Look back at that crosshair right there. Starting at this point, price action has continued to push into a newer high on every subsequent rally and a lower high in momentum. So long story short, yes, I think I would be looking for a sort of a near-term pullback. It's the yen crosses, guys, though, and I would be very mindful. Remember what we talked about with dollar yen? If I take a quick segue back to the charts that we covered just earlier, dollar yen is also probing into an interesting area of resistance as well, both on the daily and on the intraday. So it's kind of all moving together. Amir, does that make sense? So watch that near term as far as pound yen. And I would say that, again, I wish I had a little bit more of a stronger conviction for you on this, but I would say that, with what the pound is doing right now, I'm a little bit more of a neutral stance right here, sitting in the weekly range, in the middle of the weekly range. I'd be more looking to see what the pound does here, specifically as dollar yen continues to knock on resistance as well. Amir, I hope that helps. He says, yes, Mike, thanks. You're more than welcome, man. Interesting pair. We definitely will continue to track this one. Kind of got thrown off with that break above 36.18 without any material pullback last week. Remember this? We were looking at that level for a while, and it kind of stacked there for quite some time before we pushed, but you're basically still looking on a stretch into a basic trendline resistance off the highs from, what is that, November of last year. And the basic 236, that's still 141, 141.60. Questions on pound yen. Again, thanks, Amir, for bringing this one up. Very interesting setup. If you need to take a snapshot, quick reminder, I do see a couple of new names here. Guys, remember that you have a camera button in the top right-hand corner of your GoToWebinar screen. At any point, feel free to take a snapshot there if you want to take the picture of the chart and reference it later in the session. Okay, that was number 8, pound yen. All right, let's take a quick segue. We got all the dollar crosses, again, keeping in mind that we get the FOMC minutes today at 2 p.m. Eastern. Let's take a quick segue to the com block and some of the commodities that we've been following both here. I know, Conwall, you're also looking for silver and crude, right? As always, right? Let's do it. First things first, crude has been making a lot of noise. We've been watching dollar CAD. We've been talking about dollar CAD. I don't know if this thing is on the if my chart wants to load. There it is. Here's what we got. So I know this is kind of messy, and we'll walk it out, and we'll clean it up in just a moment. But real quick reminder, dollar CAD, 35.15. Looks like we just maxed right through 34.95. There's that level. Jamie was talking about 35.30, which is the upper parallel, right? So this is CAD weakness, right? Crude is doing this. Crude is doing this, pulling off a major region of resistance that we talked about last week, and that's 48.90, 48.80. And this was our bullish, or this was our bearish invalidation level. It probed through, but look at the pullback we're getting. Weakness in crude, that's CAD weakness, dollar CAD to the upside, kind of jiving well. I don't like to work in static environments where we're looking at that sort of tick for tat, but it's good when it tends to jive well together. So let me just do this real quick, guys. Bear with me one moment. Let me clean up this chart, see if we can't get any clarity on this. That's your weekly open. Okay, so here's just a quick tidbit on like strategy. So see how this formation here, I would be inclined to leave this pitchfork despite the fact that we've broken above the upper barrier here, looking for the low to be support. Notice that the low that we made yesterday actually converges right on that median line. So that kind of gives you, these confluences and converges are the best way to play these on the near term. That kind of gives you support basically around here. But for argument's sake, to keep us within the confines of the formation, just want to see what this looks like. Yeah, not the cleanest move, but the premise is you came into that major resistance just sub 49 or at 49 basically and turned off. So Conwall, look for near-term support right at those lows, confluent support there with that slope. Broadly speaking, I am still looking lower. The reason 48.90 was so critical, in my humble opinion, again, was not on the account of just it being sort of a basic 236 of this advance, not even on account of it being the high that we made back for August, but more so the fact that this constitutes two basic equal legs higher in crude prices at 48.90. So if this is just near-term correction within the broader down push, that's where you'd want to find resistance. Add to that, you have a pretty good invalidation level just higher at 44.60, excuse me, at 49.60, which if capped takes us out of this broader formation that we were looking at from the decline off the highs. Momentum, look where it capped out. You guys see that? Just ahead, just ahead of 60. So could it have been the mark of exhaustion? Possibly, probably. I don't, want to get too aggressive on it just yet. But basically, that 49 barrier in my mind is still what I want to stay below if this is going to move off from here. All right. As far as silver is concerned, here's the latest silver chart. Oof. So here's the 4-hour chart that we've been following off the decline from the highs, right? 73.40 was that key support level we cracked last week. Was this last week? A couple weeks ago. We were talking about this median line. We've been pivoting, and the 1651 region. Okay, so we're finally making a move here. Watch today's close, but below this region, you're at risk for further declines. Next downside target's 1579 and 1542 on this one, Conwell. I'd stay bearish below basically the highs that we made for the week right here. Is this the weekly high? Yeah. I do want to note that there's some pretty radical divergence going on right now, but just levels to keep in mind. See this? Oops. Converges right on that median line. The downside move from here. Again, you're looking at this parallel to the downside. Soft target at 1579, but more importantly, you got 1540, that lower parallel, which coincides on that fib. Also, just want to see where the 1618 comes in. Oh, wow. Okay. That's awesome. Let me add that here too. Here's your 1618. Actually comes in just below that 1578 target, which is a nice swing low. So give yourself a little bit of a cushion there, but that'd be the immediate downside move here for continued weakness in silver. Conwell, make sense? He says, yes, Mike, thanks. Or Amir, yeah, Amir, you're more than welcome. Conwell says, 1175, do you think till December? You know how I trade, Conwell. I really don't look that far out. If you're talking about, you're basically talking about a break of the yearly lows. So I'm not going to look that far ahead. As long as we're in this formation, we're looking lower, right? I hate to use cliches, guys, but you're in the trend until you're not. So whether it reaches into 11, that's from my trading style. That wouldn't even be a target in my mind. But all I can tell you is that, for me personally, sub 1740, I'm looking lower. That hasn't changed. He says, okay, sir, thank you. You're more than welcome, Kamal. My pleasure. So that is gold. That is crude and silver. A quick look at gold. Whoa. Okay, very similar scenario, in my humble opinion here for gold. Very similar scenario. You're probing through structural support right now. You kind of really want to watch to see how today's close pans out. But if we do close at these levels below this trend line, I would be looking for continuation down to 1171. And that would finally complete a 618 retracement, the entire advance off the December low of last year. So as far as the level is concerned, I do, there's clarity in the levels. Really just depends on the Momo signature. You're in oversold territory both on the intraday and the daily charts, which is not something you want to fight. In the same respect, if you're not already short, I don't see any type of way you can get into this with any type of decent risk management. And remember, it's always about that, guys. It's not just about whether we know if it's the long or the short, right? Is there a setup for us to actually get into the trade? And while I do think ultimately we do move lower here, you're kind of just chasing if you do anything on the short side in gold here, in my opinion. So also, any changes with Kiwi before the end of the session? Eileen's asking. Why did we see a big move there just now?
I mean, it's one of the bigger losers on the day, for sure. We're looking for 68.30. So.
Yeah. So guys, remember on the swing side of things, if the target is still 68.30 on this, which is what we talked about. The yearly open comes in at 68.29 or 28. So no, there's no change. 71.45 is still, in my humble opinion, the broader bearish invalidation level. I still think you look lower from here. Look for a break of the Brexit low, 69.55, that 100% extension. That's the level we need to beat. Intraday, guys, you're looking to take some off there, bring your stops to break even or better, and see if you can get the break. Swing, guys, you're still looking for that run into 68.30. Again, the yearly open, pretty major level there for Kiwi. Make sense? Just testing, see what that slope looked like. Eileen says makes sense. All right.
The Kiwi on the daily.
Mm-hmm.
Daily's actually the best.
This daily right here.
So if you just do a regular fourth from here to here to here, we've been resisted on the median line for the last number of days, and that's a good sign that you could accelerate lower pretty hard. See how the median line's been.
Yeah. So ahead of our bearish invalidation level, and certainly adding fuel to the fire for keeping this on a bearish trajectory, is the fact that the median line off the high. See this? Jamie just pointed out. We haven't necessarily been following this one per se on the intraday charts. We've been just using basic slope, but it adds further conviction to keeping this below the weekly high, right? Noting near-term support, weekly open. Major key support, 69.55 is the level you need to beat to get that target at 68.30. Guys, that makes sense? Can you zoom out on the hour for Kiwi dollar? Sure can. On the hourly chart, yeah. This is a 4-hour, Eileen. You want the hourly or do you want to keep this? So that's the 4-hour. Okay, and then this is what the hourly looks like. Oh, she just wants to see where the fibs look start from. Sure, yeah. So this 100% extension, Eileen, is a decline off the highs. Okay, 2 equal legs, boom, boom, boom. This 50% retracement is a much longer 50% retracement from the advance off the lows that we made back in, what is that? This is the yearly retracement, Eileen. Okay, 69.16. So that's the 50% retracement of the entire 2016 range. Okay, 68.27, just below our target on the swing trade, is the yearly open. And this retracement right here now, guys, is I just have it as a reference, right? Obviously, we don't know that this is going to be a concrete low, but on the initial rebound, I do want to see where I should be looking for initial targets, initial resistance. And in fact, that 236 literally caught the highs for the week, and that is your opening range high for the week, okay? Which is why I have them in gray. Whenever you see a retracement on one of my charts in a really light gray tone, it's very, I don't want to say it's speculative, but it's very tentative, right? Okay, we're using a tentative low. I don't know this is a concrete low, but to denote that, I'll put in a little bit lighter of a color. And as we get more evidence, if the price turns from that level and gives us a more concrete higher low, then I'll go ahead and shade that into a darker color and use it a little bit more aggressively in my positioning. So, you know, I didn't want to stack up the levels for you guys, but again, I'm still going to be looking lower here. We had that slope on the daily chart that Jamie just highlighted. Look for a break of this key region and get the next leg lower here in Kiwi. Questions? I hope that offers some clarity on that, Conwall and Eileen. Conwall saying, thanks for everything you teach us. You're more than welcome, Conwall. It's my pleasure, man. Eileen says, cool, got the picks. All right. And as far as data is concerned, guys, I do want to just quickly remind you that we do have data on tap tomorrow coming out of New Zealand. You get trade balance figures, exports and imports as well. Slight uptick expected, okay, as far as the broader trade deficit is expected to narrow from 14 or 1.43 million, basically down to 970 1. So we'll be looking for building permits later next week and all that stuff. But basically, I just wanted to highlight this import and export data during thin liquidity conditions on Thanksgiving. So certainly could be just a condition to find some more radical price action intraday here for Kiwi dollar. All right, I'm not going to leave. I know I'm over on time, but I'm not going to leave until I do Euro Oz, just because I just wanted to give you guys an update. This was a trade that we highlighted earlier in the week. It came right into the basic support level that we talked about and then broke last night. So here's what Euro Aussie looks like now. Okay, let me bring this into a 2-hour. And let me just bring up the chart from earlier in the week. All right, so Euro Oz looked like this. We had opened the week just below a near-term resistance confluence. We talked about that region 144.78. That's defined by the 50% retracement of the decline off that, basically the election range. It also represented the upper median line parallel of the decline off of the highs that we made from May. It also represented basic and former trendline support off of the December lows, now resistance. Or excuse me, that's just higher at 43.50, but the 50% retracement, the upper parallel, and those basic swing lows that we made from July, all lined up near 144.78. So here's where we opened the week. Here's what the scalp looked like, or the intraday chart, and we were looking for that pullback into 43.48. And as I noted, look for a response there. If we break below there, I think you see a little bit more of a drawback here in Euro Oz. You're looking to target the 2016 low day close. You're now risking a drop, in my humble opinion, down into 142. But that's now near-term immediate resistance, 43.50 again. Here's what it looked like, again, on the intraday chart earlier in the week, and this is what we look like right now. So we kind of narrowed, dribbled, came into that support. We closed there. We sat there for a while. Then last night, there's the break, keeping the downside bias basically in place up 43.55, 43.50. As a disclaimer, I don't have anything on this open right now. The only position, in my humble opinion, the way to play this was the short from earlier in the week, guys, from that report. If you took everything off, or if you shaved off the rest of that trade at 43.50, I don't blame you. As far as trying to get re-entry, you would need to see a zoom and retest at a short trigger and momentum somewhere in that range, or maybe even the lower parallel again to get back in. That being said, you know, I got nothing to do trying to chase this on the short side at these lows of the week. So just keep that in mind. Okay. Any other questions on anything we covered today, guys? I will have this up and archived on SB Trade Desk as soon as the processing is done. I do want to take this opportunity and wish everyone an awesome and happy and blessed Thanksgiving. For those of you who are celebrating here stateside, have a wonderful, great time with your company. A wonderful Thanksgiving to you, says Eileen. We will. Adam, same to you, my friend. Thank you so much. Graham, Nader, Conwall, Pooja. I wish you all a great weekend, and I will see you on Monday. Don't forget, we have our free public webinar on Daily FX, and then Tuesday, Wednesday, and Thursday, we return to a full webinar schedule next week here on SB. Don't forget, Jamie's up at noon Eastern, just a few hours here to go over his longer-term, medium-term setups and some of the swing trades that we have in consideration heading into the holiday weekend. Best of luck trading, guys. We'll see you next week. Cheers.